Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look again on the euro currency. Well, market has reached the next resistance level that we have specified previously. That is the monthly pivot resistance 1. It stands around 133.91, and market now is showing the retracement down from it. The way how it has been reached is a bit different from the way that we have discussed on Friday. We said that as market hit this resistance, that is the major 618 of that leg down, so monthly pivot point, so we said that probably market could show some bounce finally that could give us the possibility to take the position, but on the daily time frame, of course. But well, yesterday the market, as you can see, opened with some gap to the upside and now is retracing down. Well, in fact, on the daily time frame we do not see any moments that could tell us that probably our expectation of the taking out of these highs, that is based on the two stamp grabbers that we have on the weekly time frame, has been vanished. So nothing drastic has happened here, and the situation stands as it was previously. So the context that we have discussed is still intact and still working. Let's see what we could get on the 4-hour time frame chart. On the 4-hour time frame chart, there are two moments to keep in mind. First of all, you know, guys, that in euro currency in general on the forex market very rare left and leaves behind the gaps. It always has the tendency to close the gap. Sometimes it happens immediately, sometimes it happens closer to the end of the week. I have seen it a couple of times when the market has opened with the gap at the beginning of the week, but the close of the gap right to the end of the week. Well, but market has the tendency to close it, and that tells us that probably some deeper retracement will follow. That's the way that we should be ready for. Also, here we have the bullish and bearish engulfing pattern. It has been formed right at the resistance. You can see that the market has opened right at the weekly pivot resistance 1 as well. So that is some resistance of pivot resistance areas of weekly pivot and monthly pivot resistance. The market has formed here the bearish engulfing pattern. Until these highs will not be taken out by the market, we can't take the long position, and in the short-term perspective, and should be ready for the deeper action. The minimum target of the pattern is the length of the bars, so I think that this is an area that we should watch for as the potential target of the retracement, because that is the 3/8 support of that whole move to the upside, and that is the pivot cluster as well. So that is the monthly pivot point and weekly pivot point. And what is more interesting is that the weekly pivot point hasn't been tested yet, so I can't exclude the moment when the market will retracement down, close the gap totally, test the weekly pivot point, and then could turn to the upside again. That really could happen. Slightly lower stands the weekly pivot support 1 right at the 618 resistance 132.11. But in current situation, at least now, I do not see signs that could point on the potential deep retracement, because on the daily time frame market is not at the very bottom. It's no significant reasons to show some deep retracement right now. So market hasn't accomplished any significant target. Market, in fact, freely has passed through the major 618 resistance and opened with the gap above it. So minor bounce to the upside with the closing gap and testing the weekly pivot point just straight retracement is reasonable. But deep retracement currently I do not see reasons for that. Maybe later we will see something. But our short-term plan is as follows. So if you have the long positions, you can keep it, because our major target stands above the highs on the daily time frame. It's based on the weekly patterns. Second, if you do not have the position or you would like to apply the scale in, watch for an area around 132.75. That is a very nice area for looking potential entry on the long side of the market. Maybe market even will give us some kind of the ABCD that will give us an agreement with this level. That will be much better. Well, but I think that markets will have the tendency to close the gap and probably will reach this area.